Hi, everybody. Good morning. It's Friday, October 27th. This is Dan Sheridan at Sheridan Mentoring. And we're going to start a little early, but we're going to take a look at next week. Plan for next week, unless things change dramatically. Looks like a little quieter day today. So first of all, what's going on next week, at least from the news front? Let's see here. If you look at it, I'm just taking a basic economic calendar, marketwatch.com. And it doesn't look like anything is on Monday. Let's look at Tuesday. You have the unemployment, Chicago business, consumer confidence. Okay, nothing catastrophic there. Let's go to Wednesday, November 1st. Bigger stuff there. Fed Chairman Powell press conference at 2:30 Eastern. 1:30 Central, so market will be open while that's during the day. That should be, I think, probably one of the bigger things next week. And then you get Thursday. Let's see what's cooking on Thursday. Jobless claims at 8:30, and then Friday you get the U.S. non-farm payroll, unemployment rate, U.S. hourly wage, that type of thing. So starting Wednesday with Powell, jobless claims on Thursday, non-farm payroll on Friday. Those would be the biggies. So, that at least I'm keeping that in the back of my mind along with the Israeli conflict. And so as I'm looking, and that'll come into account when I'm looking at a plan. So with where the market is. So first, let's talk. Let's look at the market and say, okay, we've got the news, right, from a range-bound trader, which is mostly what we do. Yeah, well, that's the main part. We do range-bound, but we also do a lot of kind of your long portfolio trades, which would be at least in the ballpark of covered rights, cash secured puts, intentionally long positions. And then we have spec parts. So we do them all. We'll just do more of range bound. But you can see, just looking at the last couple of weeks or so, there's nothing range bound about that. You got big candles, and you say, well, what do those big candles represent? Those big candles represent basically the distance from the high and the low in SPX. And a bigger range would be a little more problematic for a range-bound trader. So, for example, this candle, that's about 80 points from the high and low in SPX. This candle would be 64 points. This candle would be about 50. So these candles with a little meat to them, 50 points or more. If I'm seeing 4 or 5 candles out of 8 or 4 or 5 out of 9 that are moving, that have a high low of more than that distance of 50 points, that's going to be, especially, and then you see we're going in one direction, that's going to be more, like higher waves, a little more problematic, could be, for range-bound traders. And that'll usually express itself in a higher ATR. That's what ATR measures, the difference between the high and the low and the volatility. So that's, you can see that's been going up. Volatilities have been high. We've been in the upper end of the range. And obviously the market's been falling. So not exactly range bound, but we definitely have found some trades that we're comfortable with in this environment for range bound. And then, but I'll talk about a couple ideas. Now, from the range bound part of the portfolio, something that's been working really consistently when VIX goes over 19, I'll call it more of a Sherman tank butterfly, where it just gives you more room to the downside. So you can go, and this would be an example of one I looked at it today, 40, 60, up 195. Okay, so this would be an example of more of a Sherman tank butterfly, and a little more downtrending market when VIX is over 19. You know, if I'm putting this butterfly on at 41.30, and you could see, even if we go down past the expiration break even, 30 or 40 points, I'll call this a runway past your expiration break even. You can see, even if we did it today, very low, if any, P&L goes against you, and that's today. So these are very resilient on the, these are very resilient on the downside. You're starting just a tinge short delta. So I would probably look, depending on where we're at, but if we're anywhere near these levels and VIX is 19 or over, I'd be looking to do this type of a broken wing butterfly where I'm basically selling an at the money call, buying my long 70 points down, and selling my short 65 points up. And that would be kind of the Sherman tank, how I'm constructing butterflies in this environment. You trade what the market gives you. And that's been working real well. We in our live class this month was formerly the 3K class. Now it's 10% a month class plan. We put these on every Tuesday and Thursday the last 2 weeks, and you know, you've been out in a couple of days. These have been worked very well, so that's one. So I'd probably put that on, you know, maybe Tuesday. Could put that on Tuesday. As far as Monday, I still like. I'll just give you one more. Monday, I'll probably put this on for a little bit shorter term trade. These have worked out real well because you get a lot of time. And here's a shorter term trade that I'm aiming to get out before the Powell thing on Wednesday. So I'll probably put it on Monday morning. And in a high volatility environment, this is how I'm constructing a shorter term trade. So we're just, you know, depending on what the market's giving us, that's how we're kind of constructing these. So let me just show you real quick. So I would put a 4-day trade. So this, it's not a 4-day trade today, but it'll be Monday when I put it on. It'll be 4 days. So let's just see next week, Friday the 3rd, right, is going to be next Friday expiration. So I want to put a calendar on the downside. Out of the money on the downside. 3 days between the long and short going puts. And let's say I put it at the 4100 strike here. And then let's go to the upside, and I'm going to put a call butterfly. So this is going to negate our volatility risk. So with the VIX this high, I'm concerned about having long Vega trades on it. So if we go up here, let's say 4180, 41, like this. And you can see they're both about $300, $365 on the puts, $320 on the calls. But what's nice is when you look at, again, we'd be putting this on Monday, keeping it for a couple days. So if you look at maybe a 2-day expected range, what the market can move in 2 days or 3 days, could be 40, 48 points. This gives you a lot of room, right? So if we put it on this level Monday, you easily got 40, 50, 60 points here. You got these wide wings, plenty of theta. Again, this wouldn't be put on today, put on Monday, but So I put this double structure on Monday, butterfly on Tuesday, all trades for, stronger trades for a non range bound market, for range bound trader, positive theta. Now, obviously, if things change Monday, if we wake up or we come in and the market's up 1.5% or down 1.5%, I'd reevaluate and say, okay, what's the market giving us? Those are a couple trades. I'll come back next week and on the long portfolio, talk about this in the money long, in the money covered right type thing that we've been doing in this type of a market. So thanks, everybody. Have a wonderful day. Thanks.